Good afternoon, and welcome to the Boring Millionaire podcast. In today's episode, I would like to discuss what we've seen in the stock market over the past couple weeks and where I believe we're headed and what all of these signals are telling me. So today is Friday, November 7th, and we are seeing a little bit of rocky trading today. We were down over 1% on the S&P 500 in earlier trading. And just a reminder for those who may be new or not familiar, the S&P 500 is a grouping of the 500 best companies on the stock exchange, and it's used as a benchmark to kind of measure the performance of the stock market as a whole. So where we're at, looking at the market as a whole, we're basically trading sideways. So we're in the same spot that we've been in since September, where we've had some dips lower, we've had some rallies higher, but essentially we're right in the same spot we've been over the past 2 months. Now, that's not necessarily bad, but it does tell me that the market is starting to slow down a little bit. Over the past 6 months, since April really, we have just been in straight rally mode. We've been breaking all-time high after all-time high, and even at the end of October, we saw a fresh all-time high on the S&P 500. But now we are beginning to see more down days than we have these past 6 months. We're seeing volatility rise, and what volatility is, it's the fear factor or the animosity index, basically representing how timid and how fearful investors are in the stock market. So even though we're in the same spot that we were in September, volatility is much higher than it was in September. Now, this rally is justified. From April, we had a big dip, so we originally were running out of that. We were rallying from those lows. But then in May, when we broke into fresh all-time highs, the rally continued about another 10% upward from that fresh all-time high. Now, in September, as well as October, we did see the Federal Reserve cut their rates. Both times they cut it by 0.25% for a total of 0.5%. And that is overall great news, quite frankly, for anybody in the money world. All borrowed money now becomes cheaper, and that does, of course, incentivize people to invest in the stock market. And we did see that through these past few months, but we are starting to hit the brakes now. So the next thing that the market is going to be looking for as far as kind of a signal or a trajectory is earnings season. We're deep into earnings season now, and it's been a real mixed bag looking all around. There are some companies that are rallying from their earnings reports, but there are many more that are having deep discounts coming from these earnings reports. Just a few notable ones I would like to mention. Apple had a good rally after its earnings report. Now, granted, a lot of that run was priced in prior to the earnings actually coming out, but we did see a earning-related rally from Apple. Amazon popped very, very strongly after a great earnings report. We have Meta, who put out earnings and fell over 10% on that trading day. We had DoorDash yesterday fall about 18% on their earnings report. And we even had Netflix a couple weeks ago fall 10% on their earnings report. So Google popped, we had Microsoft pop, but then kind of ease up. So it's a mixed bag all around. Some companies are responding very positively to an earnings report, but many more are responding very negatively to an earnings report. So what that tells me is that these earnings might show the companies are only doing so well. Their foresights may not be as great as investors would like them to be, and that's going to make investors hit the brakes on investing in these companies. Now, I don't necessarily think that there is a crash in the near-term future, but I do think we're going to see a lot of sideways trading over the next month or two. Now, earnings could turn around. We're mostly through earnings, but some of the remaining earnings could turn around and paint a different picture. But I'm getting the impression that the remaining earnings reports are going to be somewhat lackluster, and they're not going to really spark up the market and incentivize people to be investing in the stock market. So with that said, I'm a little timid with my investing. I'm not really rushing into anything right at this moment. But when an opportunity arises, I do take advantage of it. I do have other episodes detailing what investments I'm making this week within the stock market and why I'm doing that. But overall, I am kind of just taking a look at everything that's going on, waiting to see really what exactly happens. And it is my belief that we're going to see some big days up, some big days down, but we're not going to hit a fresh all-time high probably until 2026. So, with all that, if you have any questions, always feel free to reach out to me directly. I'm available on Facebook, Instagram, and Threads. And all episodes of my podcast are available on YouTube, Spotify, and Apple Podcasts. My mission is to make sure you feel confident in your money and that you understand the investment landscape so you could begin building a better financial future for yourself. So, thank you for tuning in, and I'll see you next week.